we need to hold that level. All right, because if that level is not held on the S&P 500, it's going to be really, really bad for the entire markets, for all of them. FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And boy, oh boy, do we have blood in the streets right now. Man, last week was absolutely murderous for the markets. The market got absolutely destroyed last week by the tariffs. So as we're going along this trading with a purpose, year long mentorship, you know we're doing the 4 pairs: pound USD, pound JPY, NAS 100, and gold. So let's do a quick update on those particular pairs. So let's start out with first pound JPY. So pound JPY, we're still coming off that peak formation high. All right, now there was a really good opportunity here, if you're a swing trader, to swing trade this from this pullback here, going all the way up to 786, all the way down. If you want to know how to do those specific trade setups, there's a video that I did, I don't know how long ago. It's called Easy 1 Hour Setups. So take a look at that video. But as of right now, we do have enough for a full cycle. So that's number one. You have to keep that in mind. Number two, the market's opened up with a major big gap. So the question is, are we going up to basically close that gap and that's it, and continuing further down, or are we actually going to move higher? Okay, if we move higher, obviously I think higher than 89,500, that should be enough for peak formation low, and then we could potentially start looking for buys after that. But for me, I would be waiting first to see what happens. The worst thing that you can do as a trader is always just think about trying to get into the market when you really don't have enough data to really make an informed decision about what you're doing with your pair. So if you come into the markets and you're confused and you don't know what's happening and things of that nature, you feel anxious, you can't figure out what's going on, that's probably a very big red flag to not trade that day and just collect more data. All right, wait for the next day so you have a full day of data to make a better assessment as to what's going on and what the market is going to do. All right, so for me on pound JPY, still coming off that peak formation high, and essentially I'm waiting to see whether or not this gap does close and whether or not we decide to keep moving further down, or are we going to go ahead and create a peak formation low that we can start to look for buys on. It's a waiting game for me, okay? And I'm more than willing to wait for price action to decide what it wants to do first and then go along with it, than react to something that I don't have full complete data on. All right, so let's go on to the next one here, pound USD. Pound USD is coming off a new peak formation high, and you can see the market's completely killed pound USD, and we are now obviously looking for sells. We've broken past the price target here that I had for our FXN Plus members. And then now essentially, if this continues to go further down, so the assumption here, okay, is a couple things. Number one, you have to look at the dollar index, all right, because the dollar index is going to tell you what it's going to do. All right, dollar index is coming off a reset, and it looks like it's wanting to go higher, okay, to cover this gap here that's left open from price. The question is it going to do that? Because if it is going to do that, essentially it is going to drive pound USD further down. If DXY, dollar index, decides not to go up here and cover this gap and go further down, essentially what that's going to do is it's going to allow essentially a peak formation low to form on pound USD, and then we go up. So a lot of this, what we're waiting on, is honestly all about waiting for what the dollar index is going to do. Okay, for right now, we're looking for sells because we're coming off a peak formation high. You just have to understand that we do have enough currently right now. We do have enough for a peak formation low to form. We just don't have any evidence of a peak formation low forming yet. All right. We had even a type 2 pattern here in London session. Beautiful type 2 pattern. First leg here, second leg. And then we didn't have a railroad track on the second leg. We just had a close below the 13 MA. But here's the important factor to this is the fact that we had a major pullback after that. This pullback candle, this wick, is essentially what could have allowed you to get all the way up here on the trade. So depending on where you got in at, let's just say half the candle, your trade setup would have looked something like this. That's a 2.5 to 1 risk reward ratio. If you put your risk above the closest high here, now that turns into a 5 to 1 risk reward ratio. But very nice type 2 pattern here on pound USD during London session. Now let's take a look at gold. Gold coming off peak formation high, so technically we should be looking for sells. Obviously, we know that long term gold is in an uptrend and we're looking for long-term buys. These pullbacks though are good. These are healthy pullbacks. We want to see these pullbacks because if we're looking for long-term buys, these pullbacks allow us into the pair a lot cheaper. All right. So we do have enough obviously for a full cycle already because we did do a pretty good retracement here. We're looking right about 1966. We're averaging about 440 pips. So we're already at 4.4 times ADR on this pair. All right. But again, we don't have any evidence yet of a peak formation low forming yet. So because we don't have any evidence of that yet forming, we still look for sells. We still want to go with this short trend until we get any evidence. For me, what I'm looking for is I'm looking for a price to be above 30.70. Okay. If we can get above 30.70, that's a very good indication that the retracement is over and we can go ahead and start moving forward and going to all-time highs and breaking above that 31.70 mark. Finally, NAS 100, it is absolutely getting killed. It got killed last week, and I mean it was really bad on this pair. If we just let's zoom out real quick and let's take a look at this on the daily time frame. Clearly, you can see we're in a huge downtrend. Now the question becomes, okay, how far down are we going to go? All right, so if we take a look at NAS 100 on the weekly, okay, here's the important factors that I'm looking for. All right, whether or not we are essentially going to continue or not. If we put just a quick line here around this area, okay, I'm looking at basically these two lows here from January of 2024. Essentially, I'm looking at 16,300. Okay, let's call it, 16,300 just to be on the safe side. So I'm looking to see whether or not we break below this or not. This is going to act as a crucial support area for NAS 100. Okay, because if we were to break below 16,300, that essentially gives us no choice but to go all the way down to 14,000. Okay, again, you have to remember that all of these areas here, right? All of these areas here, they're just train stops, right? And we've already gone through this one. We've already gone through this one. And so obviously this is the next one. And then after that, it's this one. Okay, so we have to see whether or not the price wants to come back into this area here of 16,300 and close below it. That's the important part, is close below. All right, that's the important part, is close below. This weekly candle, okay, this weekly candle is actually obviously still open right now because the week just opened. Now, what if this weekly candle that's active right now, you see the big wick that's happening. What if this candle actually wicks all the way down like this, right? And then ends up something like this. What if this candle ends up something like this with just a big wick at the bottom? Do you see what I'm saying? So it's important to see and make sure that we actually close first below 16,900. I mean, in reality, is right around 1700, 000. It's an even number. That's why I think you're getting this wicking all the way down to 16,300. It's a big ass wick. All right, it's a very big wick. So you have to keep that in mind. But the important factor that I'm looking for is we have to close below, because once we close below, not wicking it, but actually closing it below, then we can start to essentially attack the 16,300. All right. Now, Mondays is going to be used for data collections. All right. Monday is going to be used for data collection. So do not stress about always being in the market when you don't need to be in the market. Okay. Use Sunday, Monday as data collection, especially when on a lot of the pairs, when you look at a lot of the pairs, a lot of them gapped, especially JPY pairs. All right. Another thing that you have to consider, on Wednesday, we have FOMC meeting at 2. And then Thursday, we got CPI. And then Friday, we have PPI. So I think we're going to get a lot of answers this week. All right. But you just have to be patient. Okay. And know that all this entire move down, obviously, is all due to tariffs. Okay. There's a reason why this is happening. This is not just magically happening out of nowhere. Okay. This is all happening because of tariffs. All right. The market is scared of the tariffs. All right. So I think what you're going to have to do is start to look at the S&P 500. Okay. Start to look at the S&P 500. And here's what I want you to notice is the level that we need to hold on the S&P 500 is right here. Essentially, it comes down to, I want to say it's around 48,000, around the 48,000 mark. We need to hold that level. All right, because if that level is not held on the S&P 500, it's going to be really, really bad for the entire markets, for all of them. So we're going to see how these markets react to these very important levels. If you haven't watched any of the interviews that President Trump has given, all right, he did one specifically while he was on Air Force One, all right, and he was comparing the U.S. economy as a patient that needed operation. Okay, and so tariffs and all this stuff, what's happening right now, was essentially the operation. Now, in his words, he said the operation is over. So now if the operation is over, we should start to see a bounce, right? And so that's why these levels here where we're at right now, 48 on the S&P, on NAS 100. So these levels are going to be very important, because if the operation is really over, then we should start to see some type of retracement back up now, or consolidation. We shouldn't continue to see sell-offs. So you have to keep all of this in mind when you're looking at the market. And most importantly, don't freak out. Stop worrying about stuff and just let the stuff play out so you can have a better eye as to what's going to happen. But essentially, that's what I'm looking for on all of these pairs, on all the 4 pairs that we are following. All right. So just a quick update on the 4 pairs that we're following, and we'll see what tomorrow brings, and especially the rest of the week. Especially interested in seeing what CPI brings on Thursday. So just make sure that you're not trading on Thursday morning. All right, guys. But that is all that I have for you in this particular video. Be safe. Trade your trading plan. Do not force trades that need to be forced. All right. Until the next one, have a good one.